Welcome back to Next Gen Investing. It's now time to talk IBM. And today, of course, the FOMO move is to the upside as we did touch all-time highs earlier today. I'm now joined by Marley Kayden, a contributor here on the network, to discuss really more of what is driving all this optimism. I know there's a lot of quantum computing excitement, but there's also the analyst community that gets more and more favorable on a name that is still shocking to me that we're this excited about IBM, but here we are.
Well, I mean, here we are. But it is IBM, though. I mean, it's one of the largest enterprise computing firms in the world. So, and one of the oldest tech companies in the world. You mentioned the price target increase, so we should talk about that. Evercore ISI raised the firm's target on IBM to 315. That's a street high now from 275. They kept their outperform rating on the shares. That is what's driving most of this move today. Right now, we're trading up about 1.8% at 282.27. Like you said, we did touch that all-time high of 284.50 earlier today, but still trading pretty close to that number. The Evercore ISI analyst thinks IBM can sustain mid to high single-digit sales growth and double-digit EPS and free cash flow growth over the next several years, and they think this has them trending towards a $16 to $18 EPS power over the next 3 years. And just for some reference, most recently their EPS was $1.60 a share. So this is what we're looking at here. Also, you did make mention of that quantum computer. IBM announced or revealed, I guess, to the world that they are going to build the first large-scale quantum computer. They say they solved one of the major technical problems with quantum computing. They've gotten around that error code that most of these companies trying to do it, and they've figured it out. They have not released the data for peer review, so people don't know exactly what their workaround is, but they are saying by 2029 that the IBM Quantum Starling, that's what they're calling it, will be built, and they're building it in Poughkeepsie, New York, expected to perform 20,000 times more operations than today's current quantum computers. So lots of excitement around one of the oldest tech companies in the industry.
So this is next-gen investing.
Yes.
We spend time talking about forward-looking companies and exciting tech names. We spent, for context, we spent a lot of time on Palantir and Tesla and NVIDIA. IBM, particularly for this segment, is not what comes to mind, but maybe it should for the reasons that you're talking about. But I can't get over my memory of 22 straight revenue declining quarters. I think that was in 2017. So it's as if IBM has turned the page on that really kind of, I guess, disappointing period in the 2010s. And perhaps we shouldn't be surprised with all this Watson investment over the years that when we finally are on this AI, quantum computing, that IBM's right there.
IBM is there, and I think they aren't thought of as an exciting company. They're not newer. They don't have a lot of positive headline-making news of late. Like you mentioned, they had a lot of misses. And their price target right now, they have their high, I mentioned, that 315. Their average is about 250.91. So from where they're trading right now at just a little over $282, that implies about 11% downside. Their average is 250.91. So like you said, Alex, a lot of people not having big expectations for IBM here. Their low price target still 170. So analysts still very mixed here, feeling kind of how you feel. Do they belong in a next gen show? But if they really do create this quantum computer, and if they've really solved that workaround, that networking error that seems to be the issue that every company in this race is trying to do, there are some positive points. Their last quarter, others withstanding, they did have strong revenue growth. They had profitability, they had cash flow generation, and they did exceed expectations. So it was a better quarter than usual for them. But consulting revenue was flat, and there seems to be a lot of concern about that.
Okay, so with some of these concerns, I mean, is there any reason to say this narrative could be challenged? What are right now some of these still persistent headwinds that IBM is facing? Because I tend to look at things not from a skeptical view, but just to be more realistic, hey, with all this upside and with the outperformance from that chart we just saw, especially long term, what is now the risk?
So the major risk, consulting revenue, that seems to be the one everybody's very worried about. It was flat in the current quarter, and their federal consulting business, which is, I should tell you, 10% of their total consulting, could be susceptible to some discretionary pullback. So that's another concern analysts are mentioning. Also cautious about contributions given the current economic conditions for consulting. Infrastructure revenue, also a potential issue here. It declined by 4%. IBM Z down 14%. But they are releasing their new IBM Z17 mainframe that has a lot of AI capabilities. So a possible concern there, but there is some possible, and obviously, of course, macroeconomic environment remains uncertain. We don't know about client buying behavior, and of course, those consultant services, a big issue here.
I think you bring up a good point, too, which is the sprawling nature of these businesses. These really successful companies of the 80s, the 90s, the early 2000s have just grown into these giant conglomerates. And you think of a company that's very different, that was once the Apple of the market, was GE. And it was struggling until it decided, hey, let's focus in, let's separate the businesses out, and it actually allowed it to breathe a little bit. So perhaps something down the line like that for IBM could make sense, or this new growth sector with quantum and AI will just help grow it out of its troubles elsewhere. But what do they say in sports? Ball don't lie. And I guess in finance we can say the chart don't lie, because it's at all-time highs. That's pretty impressive.
Yeah, their chart is not lying, and their generative AI business saw significant traction in this last quarter. Their book business is now over $6 billion. They were up $1 billion on the quarter. So really, like we're seeing in all of the names that you're usually talking about on the show, huge drive into AI. And for IBM, it's getting their name back in the conversation.
You know, it really is. And it's been, I know, like we say, they're not like a next-gen stock, but as much as we talk about them, I guess they
are today.
Yeah, they've proven themselves to definitely have a seat at the table. So I really appreciate that and really great insight onto IBM. And so now as we look to now trade, of course, IBM here, we pulled back, 0.8% from highs. We've pretty much been at that level for a while now. So how do you think about trading this name for example purposes?
Well, as promised, it's going to be the same strategy. We looked at the others with the same kind of risk-reward metrics, but it can still work even with the stock at all-time highs. So clearly the technical trend is to the upside. It's got nice momentum. But I looked at a short put verticals. I do think some of those same conversations about proving it and showing the market apply here to IBM. So neutral to bullish, going with the trend, but wanting to give it a little bit of cushion in the event that it does have setbacks or lacks additional push here to the upside. $1.25 credit for the July 275, 270 put vertical. You can make $125, Jenny, on $375 in risk. The break even is $273.75. So if we were to compare that to the current share price of $282, you got, let's call it 3-4% of cushion to the downside on this one. But three very different stocks, same exact strategy, can work for all three.
Okay, yeah, so I think I like the way that we did those example trades today. Of course, different ways to look at very similar but different types of worlds right now. So great a way to break those down. Appreciate it, Marley. Appreciate it, of course, from Alex. And we'll leave it there now for FOMO.